Oil price is quite volatile as of late, and for good reason. Whenever there's any news with regards to the coronavirus and lockdown, it's usually going to be a negative when it comes to energy demand. Though on the flip side, we did get that traffic jam yesterday, giving the energy commodities price a bit of a boost. So what about oil data? EI's oil inventories readings for the US in this case, it was a larger than expected surplus, but when it comes to gasoline stocks, it was below expectations. So a bit of a mixed report there. And when it comes to OPEC plus rumors, in this case, that unconfirmed report saying that they're going to extend output into May, though that's usually an attempt to try and push them into confirming or denying ahead of their meeting. So that's on the fundamental side. What about when it comes to technicals? Now, the weekly is far more bullish, far more technical boxes flashing green, a bull trend that's stalling. But when we zoom into the daily in this case, it's been quite conflicting, especially that move last Thursday that really threw a wrench into bullish technicals. And in this case, you can see that although it's a trending ADX, average directional index, well, in and of itself, it only shows that it has a propensity to trend. It usually needs other indicators to really give it direction. And so far, it hasn't been getting much from the rest that are predominantly neutral. So while you might get some volatile movement in the very short term, especially on any fundamental updates that could take prices beyond key daily levels, overall, it has been oscillating back towards a certain mean. In other words, eventually consolidatory move, and especially prior to OPEC plus meet. So that's when it comes to technicals. What about when it comes to sentiment? In this case, COT speculators, or green dotted line on the chart, they've been holding a consistent extreme long buys for quite some time. So they have profited on the move higher. However, as it continues to remain range bound, it's actually benefited retail traders more. That's the blue dotted line as percent long on the chart. That red line, by the way, that's 50%. So whenever the dotted line goes below the majority short, above means the majority long. And in the case of retail traders, that drop into the 57s, they actually went to a heavy buy, 71%, taking on some significant long positions. But yesterday's price increase gave a chance for a lot of those averaged in longs to be able to get out and unwind. And that's taken it from 71% yesterday to just 54% majority long as of today morning.